Hello. Is it working? A little bit closer. Okay. Can I get everybody's attention, please? All right, we're going to go ahead and get started. Good afternoon, everyone. My name is Shannon Thomas. I am the chair of the Diversity, Equity, and Inclusion Group. DEI is playing a much larger role than ever in our lives and in our interactions at work, school, community, and at each realtor association level, local, state, and national. To challenge ourselves to be better, CAAR is committed to bringing influential speakers to broaden our mindset and change the way we think or approach issues and situations. We encourage you to listen, ask questions, and understand one another. Seeing you in the audience shows that you have a desire to be a better person. And with that, the DEI group wants to thank you for being part of the DEI conversation. At this time, I would like to thank our presenting sponsor, Virginia Housing, for supporting our DEI events this year. I would like to welcome Frank Webster of Virginia Housing to share a few words. Thank you.
First of all, I have to admit, I am an introvert, painfully shy, and I don't like to do anything that draws attention to myself. So we are glad to be here today. This is like the sixth DEI session that we have supported this year. And I've told Allie at the beginning of the year, if anything comes up that's DEI, don't even shop it around to anybody else to do it, because Virginia Housing is such a big supporter of this that we want them all. So I'm just glad to be here, and I've made a lot of contacts and have some good relationships with you guys over the last year, and we just look forward to a great 2024. I would like to use this opportunity to make some announcements about Virginia Housing, about some things that are going to have a profound impact on the housing market in 2024. So you will be among the first realtors or among the first any kind of professionals in Charlottesville to hear these things. I cover the western part of the state, and my job is to develop business for Virginia Housing. And whenever I sit down with my bosses at Virginia Housing, the first thing that they want to know is, how's Charlottesville doing? How's your numbers doing in Charlottesville? And truthfully, Charlottesville has been a tough market for me in the last couple of years because our sales price limits have been so low for Charlottesville. And many times I'm told that you can't even find a first-time home for somebody for the sales price limits that we have. So we have gone and made some changes that will go into effect Friday of this week. Again, it's going to make the housing market be a lot stronger for us in Charlottesville, and I'm going to have a much easier conversation with my bosses the next time I sit down with them. So let me just tell you these things real quick, and then we'll get on to the main business at hand here today. But please share this with as many people as you can. This is big news. Remember, I said that one of the reasons why we couldn't do more business in Charlottesville was because we couldn't do a sales price of more than $375,000. You can't find a starter home for $375,000 in Charlottesville. So what we have done starting Friday is we've eliminated the maximum sales price. Woo-hoo. So the only thing that you'll really have to be concerned with is the maximum loan amount that the agency set. And so you can at least go up to $726,300 on a home in Charlottesville in the upcoming year. And that more than doubles the sales price limit that we had in the past. So that is huge news. We've also drastically raised our income limits. The highest income that you could have for a Virginia housing loan in Charlottesville before Friday was $113,000. We have raised that to $152,000, a very significant increase. And also for the we have eliminated the first-time homebuyer requirement. So you can work with non-first-time home buyers now in Charlottesville, have no maximum sales price, have income of up to $152,000, and do a no money down loan for somebody who has owned a home in the last 3 years and occupied it. So we feel that with these changes that we're implementing starting on Friday, that this is really going to be a game changer. It's going to open up the door of opportunity much wider for everyone in Charlottesville, especially for the people that we're going to be talking about today for diversity, equity, and inclusion. So we're just really happy to let you know these things. If you would spread the word, and if there's anybody that would like to invite me to do trainings at their real estate offices to go into a little bit more detail about that, I would love to come and spend as much time in Charlottesville in the near future as you can possibly squeeze me into. That was the maximum loan amount. So we've always had a maximum sales price before. So if you had if your sales price was $1 over the limit, you couldn't just put money down to make up for it. Now we don't have a maximum sales price. We just have a maximum loan amount. So you could go up to 726.2 with no down payment. And if you had a $750,000 or $800,000 house, the borrower could put money down to get down to that lower loan amount level. So again, every change that we've implemented, all these significant changes, we think it's going to be a game changer, and you should see a drastic increase in the amount of Virginia housing business that's going to happen in the upcoming year. So again, I've taken my 3 minutes, but I'd love to come to your individual offices and do training presentations, or for the board office, and we'll tell you more about it. But at that, I'll turn everything over to our main speaker, and I appreciate you guys.
Thanks, Frank. That's a hard act to follow. In addition to that news, I want to say thank you to our diversity, equity, and inclusion group this year. Some of our accomplishments include promoting the realtor profession and the realtor in the community during the 38th Piedmont Community College Job Fair, obtaining a $3,000 National Association of Realtors Housing Opportunity Grant to help sponsor National Association of Real Estate Brokers Realtist Chapter of Richmond Community Wealth Building Day, delivering a diverse number of topics this year, including disability, inclusion, and awareness, LGBTQ plus training, and fair housing through the Long Island Divided session, where we received both a $2,500 Virginia Realtors Diversity Grant as well as a $5,000 National Association of Realtors Diversity Grant. We also added a new publication to our DEI library, which we have in the pre-function area for you to browse and check out various books. We also have children's books as well. And encouraging CAAR to sign the Stop Hate in Real Estate Pledge, which is supported by various multicultural organizations. As a recognition of our efforts, immediate past president S. Lisa Herndon presented me with a President's Award as part of the CAAR 2024 Installation of Officers and Directors meeting, which I look like a giant. Shouldn't have worn heels that day. In addition, this year's DEI group, as well as the inaugural DEI Council, were acknowledged with a President's Award certificate, a You Make a Difference pin, and a framed quote which reads, "Vision without action is merely a dream. Action without vision just passes the time. Vision with action can change the world." This award is given by the president to a person or group who has shown loyalty and support in advancing the objectives of CAAR. We are very proud of what we have accomplished, and we appreciate your support in those efforts. Staff will be in touch to coordinate a date and time when those accolades can be presented to the groups and a group picture can be taken. But at this time, we will move forward to our featured presentation. I would like to extend a warm welcome to Regina Cheney, Senior Community Outreach and Engagement Specialist with Housing Opportunities Made Equal of Virginia, or HOME of VA. A native of Richmond, Regina began her housing advocacy career in 1979 after receiving several denials for a loan to rehabilitate her home in Richmond's Churchill community. Regina's grandmother, who was a local activist, encouraged her to connect with Richmond United Neighborhoods, or otherwise known as RUN, a community organizing consortium working on a housing issue called redlining. After attending several meetings, Regina realized that the reasons for her denials were reasons often given to applicants living in communities that were redlined. Regina began to study the effects of redlining and did her own investigation of local banks and the communities they served. If you would like to learn more about Regina, please refer to this program's handout. Home of VA contact information is on the flyer as well. If you have a question for Regina during her presentation, please locate the closest microphone to you. I think we got 2 in the room. Those on Zoom, please use the chat feature on the Zoom toolbar to submit your questions. They will be read out loud. And with that, Regina, I hand the session over to you.
Good evening, everyone. I'm going to close this up. Hello, everybody. Come on, let me hear you get alive. Thank you guys so much for inviting me. Yeah, I want to make sure that I got that right. So again, I'm Regina Cheney. I've been with Home actually for 37 years. And as part of my bio, you can understand why I joined Home. It was a place that I found to be working toward a cause and a mission that I was very much interested in after my experience. So let me go on to what we're going to talk about today, of course, is credit equality and housing access, and how bias practices in credit and lending contribute to housing inequality and instability. So first I want to talk to you a little bit about Home, for those of you who may not be familiar with us. We are a private nonprofit fair housing and civil rights organization. We've been serving residents of Virginia for about 52 years. And apparently I've been there almost since the first brick was laid, but I've enjoyed my stay there. We actually provide, we investigate and litigate individual and systemic allegations of housing discrimination. Most of our housing services are restricted to the Richmond metropolitan area, but our statewide services are, of course, our fair housing work, the fair foreclosure prevention, where we assist families to avoid foreclosure, and our research and policy work. Our research team, they research systemic and housing discrimination, and we lead state and local policy efforts. Now, I will say, and toot our horn, that in 2020, when more protections were added to Virginia's fair housing list, Home was very instrumental in getting the sexual orientation and gender identity as to be part of a new protection in Virginia. We did some testing in the Hampton Roads area, in the Richmond area, and somewhere else, but we were able to get enough evidence to present to those patrons who were looking at or holding that paper to help get that passed. As well as a source of funds, we provided a lot of assistance in helping to get that done. So when we talk about home ownership gap between Black and white homeowners is greater today than it was 50 years ago. The Fair Housing Act was passed April 11, 1968. And for a period, maybe for a couple of years, things began to get better. But somewhere along the line, things fell apart for various reasons. Now, when I was talking to Allie earlier, and we were talking about planning this event, a lot of the data or information that I'm presenting to you is focused in Richmond. Our research person just had a baby. It was his wife who actually had the baby, but we didn't have time to kind of, do the research in the area. So hopefully I can get that to you, in the near future. But right now we're dealing with the greater Richmond area. But in the Richmond area, data shows that homeownership rates for white families is 72% as compared to 48% for Black families. And you wonder in 2021, 22, 23, what in the world happened? But when you look at then and now, we see in 1970, the homeownership rate was 45% for Black households and 64% for white households. That's a gap of 19 percentage points. In 2020, the homeownership rate for Black households was 48%, and for white households, 72%, which is a 23% gap. So although Black homeownership has increased, the disparity in homeownership rates between Black and white households has actually widened. And forgive me, because I'm seasoned, so I'm getting hot. Sweating. So the question is why? Well, it has certainly, the gap has increased over the last 50 years due to for a variety of reasons. Past home reports and exhibits have focused on redlining, segregation, and intentional government action and inaction. In addition to those factors, the largest remaining barriers to closing the racial gap are access to credit, to capital, and because there is also a dual financial market in this country, another issue is the role of credit. So we all know that where you live makes a difference. Most households, of course, rely on mortgages, mortgage loans to purchase their home, especially first-time home buyers. And lenders use credit scores to determine whether a person is eligible for a mortgage loan and the type of loan and what they are willing to offer them. Regarding the loan product, different terms, principles, and et cetera, rates, fees, and other factors. Better credit tends to qualify borrowers for better loans. Because of this, credit impacts the cost of borrowing and the size, quality, and location of homes that one can afford. A credit score can be a deciding factor in whether a person can afford a home and the ideal community for them. Where they live affects every aspect of their life. Where they shop, where they buy food, where the school their children will go to, how they access healthcare, the types of transportation available, and more. And to know the issues, and we know that all these issues don't just affect home ownership. We're talking about housing in general, okay? Because even for renters, this is an issue. Am I upside down? No. So how does credit play a role? Well, it's actually a modern invention. Borrowing, lending, and debt certainly are old concepts, but credit reporting as we know it began less than about 200 years ago. It began as a way to keep track of commercial merchants' transactions to prevent them from overextending or their overextension of credit. But it wasn't until the 1950s until we began to see consumer credit reporting and the modern day credit score become standard. And of course, as a human-made concept, credit scores are subject to human errors and as well as bias. So what's included in a credit report? Usually when we have, and actually we do have part of our exhibit, credit inequality and wealth gap exhibit in CAAR's office. Over the past year, we have had that display in various libraries in the Richmond metropolitan area. And this particular exhibit actually has little doors. And so, you know, I act like Vanna White and I open the door. But today I'm just going to ask the question. In the audience, tell me which of these is not included in the credit report that makes up the credit score. And somebody can just raise a hand. We don't, yeah. The credit is what's included in the credit report. Of these items here, What things are included in the credit report? Oh, actually, I asked what's not.
The two that I'm seeing are typically rent payments, although my understanding is that is changing, but the other is utility payments.
Exactly. Now we talk about those two major things, right? And yes, that is about to change, we hope. Because when somebody's going out to rent a place, or when you want to do anything, it's your credit score, right? And if your rent and utilities are not included as part of making that up, then why are you looking at it? Well, of course you want to look at overall, but okay, personally, okay, I may not pay J.C. Penney's, but I'm going to pay my rent and I'm going to pay my utilities. And so therefore, one major issue or issue with housing is not even included. Also, of course, a lot of these things, when you look at payday loans, and we'll talk a little bit about that in a few minutes, people who tend to get payday loans, will call that fringe lending. They pay an exorbitant amount of interest, okay? They may pay it on a regular basis, but they don't get credit for it, okay? Of course, bankruptcy is part of it, errors sometimes. Credit inquiries, it all depends. If it's, soft, is it a hard pull? All of that will depend on how it's done. But that's a main thing. And I'm glad you said that it is going to change, and we're hopeful that that will open the doors for more folk. What causes credit inequality? Credit is an essential aspect of the U.S. economy and has important impact on people's quality of life. Credit determines who qualifies for a loan. You need to buy a house, start a business. Credit is often used to determine what your insurance premiums are. And that might be even homeowners insurance, could be auto insurance. Certainly, as I said, buying a house. But racial and ethnic disparities in credit mean that certain groups have fewer opportunities than others to obtain these important resources. Other factors that may contribute to it, certainly, again, like I mentioned earlier, is human error, but also intentional error or harm. So when we look at credit disparities and racial and ethnic groups, as you see on this slide, and the percent, this is 2007 data. In 2007, Asian Americans 55 percentile, white 54, Hispanic 38, and Black 26. Actually, in 2021, data reports, when you look at actual credit scores or the average credit scores among different ethnic groups, Asians scored 745, whites scored 734, Hispanics were 701, and African Americans 677. In theory, we know credit scores should not be affected by race, but an individual's credit is built on his or her history. And for Black Americans, that history may well include a lack of generational wealth, which partly because of the past discriminatory practices like redlining. The disparities in wealth, such as student loans, student loan debt, and financial literacy are factors that can hurt credit scores in different racial groups. In fact, a recent study showed that Black college graduates owe an average of $25,000 more in student loan debt than their white counterparts. The difference between the average wealth of a white family and that of a family of color is huge. That alone impacts credit scores. The higher the income you have, the more likely you are to pay your bills on time. And also establish maybe savings accounts that would allow you to address any unexpected emergencies. So earlier I mentioned something about a dual credit market. And this is very real in our country. So the mainstream is, I guess it's on your left, market is fully functional, it's safe and regulated. This side can help build wealth and is credit building. Middle, upper income, and predominantly white communities have reliable access. On the fringe side, that is the credit market that's a credit market that is barely regulated, ineffective, and unsafe. This side is equity stripping and wealth depleting. These products are designed for borrowers to fail, and they have unreasonable terms that to increase the profit for the creditor. It targets lower income communities and communities of color. Mainstream lenders often have underserved Black and Hispanic individuals and neighborhoods, precluding credit building opportunities. This excluding and underserving of people of color from the mainstream lending has sustained a fringe market offering higher cost loans that pose substantial risk to borrowers. Fringe lending is typically not reported to credit bureaus, as I mentioned earlier, unless the borrower misses the payment and the debt is sent to collections. Because of this, borrowers risk damaging their credit and have little or no opportunity to build credit in the fringe market. Now, how has the financial system failed communities of color? Now, when we look at the issue of redlining, historically, lenders have excluded predominantly African-American communities from their services. Contemporary credit disparities are in part a legacy of historical discrimination. Prior to exclusion of Main Street financial services, limited Black households opportunity to build wealth and pass it on. Which also impacted subsequent generations' ability to secure credit building loans. And one example of that is redlining. So just to kind of give you an idea of my story, I was a recent college graduate. I was working for a bank. I had excellent credit, and I purchased this house in Churchill from my aunt's neighbor, and I knew her, so I was able to pay her directly. I didn't get a loan. We negotiated on the price and what it was going to cost me a month, and that's how I bought it. So I went out to get a loan to do some rehab on the house. So the loan that I was asking for was actually, the house was assessed and even appraised at least 7 times as what I was asking for. Okay, so it wasn't the issue of whether or not that loan could be covered with the equity in this property. And I was so naive that what I did was I had a party and I had some friends to come over and we gutted this property out, right? This is just banging, knocking walls out. I'm getting so excited. I'm going to get me some new walls, put up some insulation, all this stuff. Okay. So in the process of doing that, that's why I'm looking for these loans. And I went from bank to bank to bank, and I was denied. And I was given all kind of crazy, things. And this was, now mind you, this is like 1980. Okay. I was like 26. And if you were married, if you had children, it was one thing after the other. And that included the bank that I worked for. Okay. So at this point, I'm desperate. So yes, my grandmother, who was an activist at that time working with RUN, they were working on this issue of redlining. And she said, you need to talk to these folk, and I was like, okay. And so I go into a meeting and I'm listening and I'm thinking, oh my God, everything that you're talking about has happened to me. So again, yes, I did begin to investigate or learn more about redlining. So it just so happens that two banks were about to merge. And you know, in the 70s, 80s, there were a lot of mergers, you know, savings and loans going out of business, da 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 da. So here are two banks that are about to merge. Okay, so what we did was to use CRA to interfere with this merger. You can use CRA to do that. Now, apparently these lenders, even though they were supposedly following the CRA guidelines, didn't have a clue as to what it could or could not do. And this little community group, I mean, it was more than 10 of us, well, in the core group on this redlining committee, because the run was actually a group of 7 churches in the Richmond area. But it was a small group of us who said, okay, we need to do this. So we filed with the Federal Reserve Bank in Richmond to hold up this merger until we could have conversations based on CRA guidelines and based on what the lenders were supposed to be doing. Actually, one of the banks that was part of that merger was the bank I was working for. So I actually investigated the other bank that was based out of Tidewater. So I think I was working nights at that time in the bank, but I would go down to Norfolk in the mornings and I would go to the bank and ask for their files. And most of the time they didn't even know what CRA meant. And so when I was explaining, it's like, okay, you know, this is on the 2nd floor. And of course I had to sit and read because they wouldn't allow me to copy them. But anyway, got enough evidence that no, you're not following the CRA guidelines. You're not serving the communities that you say you're serving. And so we had the CEOs and presidents of these lending institutions to come to the table. Well, first of all, they didn't come right away because they didn't know that we could even do this. Who are these people? And when they realized that they needed to meet with us in order to move forward with their billion-dollar merger, they finally came to the table. We actually met at my church. And we had conversations, and initially, each one, of course, said, we don't do that. We don't deny people loans for, excuse me. So I became the poster child. You denied me. You denied me. Yes, you did. And you denied me for these reasons. And so once the negotiations went through, make a long story short, they realized that they needed to work with us in order to make this thing happen. So we negotiated on a few things. One of the things I knew that I needed in my neighborhood, because I knew I wasn't the only person that was having this problem. And I had talked to some other friends in my neighborhood. So one of the things we needed was home improvement loans that were affordable. During that time, interest rates were anywhere from 10, 12, 13, 14%. Anybody remember that? Yeah, during that time. So we needed interest rate loans that were affordable for the people in this community. Because see, it's one thing that there's a perception about minority communities, particularly when you talk about where folk just don't, where there's disinvestment, okay? People don't care about their homes. You know, they just let them fall apart. Well, no, it's that they can't find the money to fix it. Okay, it's not that they don't want to, it's that it's hard to find money. Now, I will tell you what happened with me, my desperation, because I had knocked the walls down. I had to go another route, the route that African Americans had used for years. In place of Main Street banks, we went to a finance company, right? Because grandma went to a finance company and those before her went to a finance company because we couldn't go to banks. So I actually, anybody heard of Friedlander? Oh my goodness, wasn't that something? But so I went to Friedlander to get the money that I need. Now, what should have cost me not more than 7.5% to 8% cost me almost 13 to 14%. Okay. But at this point, I'm desperate because I don't have walls. All right. So I'll take what I can get. So anyway, once the agreement was set up with the bank, with the participants, I guess you would call them. That was one of the things. The other thing we asked for was a homeownership counseling program, some funding, because back then it wasn't as, prevalent as now. Everybody has one now, but it wasn't then. So we asked for that as well. So everything on our list we were able to get, because they weren't really outrageous things to ask for, right? Well, and I'll give you a little background on that. The two banks that merged was First Emergence and Virginia National, that's VMB. Those two merged to become Sovereign. Sovereign then later became Nations and is now Bank of America, okay? So, but it changed my community because we were able to get those loans, low interest rate loans. People were able to do repairs to their homes and do some things that they hadn't done for a while. So that's my background story, which is how I even got into this field, which is why I'm also very passionate about what I do. Because unfortunately, this redlining issue is still going on. Because historically, what we find is that communities such as those in the red that were redlined 40 and 50 years ago, they still have some issues, okay? But in 2022, the Consumer Financial Protection Bureau and the Department of Justice ordered a lender that was based in Delaware, who served residents in Pennsylvania, New Jersey, and Delaware to pay over $22 million, which is really not a lot of money, $22 million for deliberate discrimination against minority families. And we're talking about not taking loans. We're talking about sending emails with racial slurs. I mean, we're talking, this is 2022, but these things still happen. Another major contributing factor certainly would be appraisals. Okay, now we're not going to even talk about appraisals today because we don't have time. But I will say another one is advertising. Does anybody in here have any information on the Facebook settlement? No? Okay. So probably about maybe 4 years ago now, there was a settlement with Facebook with the National Fair Housing Alliance. Because in advertising, there is this thing called, I think I want to say it right, it's phishing, I think. It's PH something else. But it's a way when you go into Facebook or maybe any other social media platform where you advertise. And, discriminatory advertising is against fair housing law also. But this is one of those things where you go in and you can you check boxes for for who you're looking for, right? For the audience that you're hoping to sell your product to. You can go in and set that up. Well, what was found was that on Facebook, where realtors were advertising property and, doing some type of, they were building up their portfolio, they were actually checking boxes that excluded people of color and certain communities. So even though I was on Facebook, I didn't see that there was property over in the West End that was available to me because of how it was designed. And so with that, that process, the National Fair Housing Alliance certainly uncovered, did some investigation, and there was an issue with certainly a settlement with Facebook to have that process stopped. Now, you can't stop everything because believe me, if there's a law, somebody's going to figure out how to break it, right? So we do the best we can. And every time somebody breaks one, you just kind of figure out how to figure out who they are and where they are and what they're doing. So anyway, the alternatives is using, like I said earlier, the risky financial services. Now, this was another thing that Allie had asked, and of course, like I said, our research person wasn't able to do it in time because it takes a little time to get this together. But when you look at this map here, the darker area is communities where 75% of the residents are of color. The lighter is 25 to 70%, and even lighter green, less than 25% residents of color. So when you look at the red dots, you see that they are all in the darker areas, right? Those are where payday loans are. That's where people are paying 45, 50, and 60% to borrow money. Now, when you look at the branches, that's your mainstream, you see it right along here. See that? In those communities, it's probably less than 25% residents of color. And it's all along, this is Broad Street, all along Broad, this is a whole cluster, in this community. You got about 6, 7, 8 banks. But over here, where is it? Where I live, you don't see one, do you? Or either I got to go down here. But look along here. This is all in South Richmond. And then when you go out here, it's just all over the place, right? Mainstream lenders. But that's an example of how things happen, right? And why people get into so much trouble, why there's an issue of access to credit. This is part of the problem. So who uses fringe benefits? Or benefits, they're not benefits. Fringe services. I get benefits because I'm trying to apply for Medicaid. Anybody knows how complicated that can be. Who uses these fringe services? Well, 46% of African Americans use fringe benefits. 40% Latino, Asian, 19%, and whites, 18%. But you see who it affects mostly. When we look at loan origination, excuse me, in the Richmond metropolitan, well, in general, Black households make up 28%. This is in Richmond. Black borrowers are significantly underrepresented in the metro Richmond area. So Black households make up 28% of the total households, yet only 18% of the loan originations. Well, while white households make up 59% of the households in Richmond, but they also have 70% loan origination. That's, again, a big gap. So moving forward, what can be done? Well, first of all, there are these things called special credit programs that have been around actually for some time, where lenders can actually develop special credit programs to provide special opportunities or credit opportunities for groups that have been harmed by systemic racism in housing and lending. Governments and businesses and private donors can fund assistance programs for down payment, closing costs, and interest rate reduction that benefit homebuyers from that disadvantaged group. Public and private sectors can also fund and implement programs for early credit education, especially in disadvantaged neighborhoods and communities. And as you noted earlier, credit bureaus can change the kind of data that they accept and report. Also, expand CRA. CRA worked in my community, okay? And I will mention, we do know that for the last maybe 3 to 5 years, particularly during COVID, most loans today are made from where? On the internet, right? Most loans now, I think it's 65 or 70% of lending, that's a big market that they have there. And they are not regulated like the brick and mortar banks are, which is certainly an issue. So require fair housing training for lenders and housing professionals. Now, I will say that you can provide training all day long, but if I am on the inside and I have an issue with certain people, I can make things happen or not happen. So people really have to change their perspective in order for things to really make a difference. So I certainly would thank you guys for listening to me. Join the movement at home. Like I said, home does a lot of research. We work on policy issues. We also want to hear from communities. We actually do community conversations, and we've done some in Charlottesville actually last year. And we're doing some work in Charlottesville now to work with residents, particularly as we work with landlords and property managers. But just to hear the struggles that people are having and trying to figure out how to help people move forward. Because I mean, in the end, when I win, you win. Okay, that's just how it is, and always has been. So I will say that when you know or you feel like something is not right in your field, could be your partner, your coworker, whomever, somebody, another agent, or something that's doesn't feel right. You think it is against the law, and you're not sure what to do with it. You know, what's your name again? Shannon. I don't want to turn Shannon in because she really is a good person, but I know she's doing something funny over there. So the question is, do I talk to Shannon about it? Sometimes that works. You know, I don't think that's right. And I'm not sure, whatever. You know, if you don't think that you can discuss it with Shannon, or Shannon says, I don't care, or you don't know a person well enough to have that conversation, you can actually report funny business, we'll call it, or something that doesn't seem to be above board, anonymously to home. All right. Then you can go online to our website and you put in some information and you say you want it to be anonymous. You can. I have an issue with that because you can always follow anything on online. You can always call me or anybody on our staff, and you don't have to have all the details, but say what you think is wrong. And then let us move forward and we can investigate it. I will say that when anybody who is in the housing field, and when you know or feel strongly that something is wrong, that's hindering somebody from moving forward, if you are not part of the solution by acknowledging that or saying something about it, then you're part of the problem. That's just how I see it. That is not home. That's Regina's words. Okay. So, but I do thank you all for your time. And if you have any questions, I'll try my best to answer.
I'm concerned about what's been going on in our field for the last couple of years. You know, the Brookings Institute's reports and things like that. Dr. Perry and everybody being involved with it, been following it very closely. Are y'all seeing a lot of complaints regarding appraisals?
Well, since yes, since a lot of the stories, the horror stories that have been out there for the last couple of years, we are hearing more from folk to say, I think something is wrong. We have not, we're doing a lot of training in our office for our fair housing team to become more well-versed with investigating those cases. But right now, when we have one or when they come in, we refer them to the National Fair Housing Alliance. But the National Fair Housing Alliance is working really hard at addressing some of these issues. And also, so is the Department of Justice getting involved in those cases.
Yeah, my firm's actually a member with the National Fair Housing Alliance.
Okay.
I'll reach out to you afterwards and give you a card, but our office would like to possibly help with your staff learning about this.
Well, thank you. And you know, yesterday, one of our staff attorneys said to me that she found out that appraisers are supposed to have fair housing training. But like I said, you can train all day long, but it all depends on what you think. But they're supposed to have fair housing training, but there's something in their guidelines in Virginia that says that it doesn't have to be an approved fair housing training. So that means that you could teach somebody else, you know, well, what do you know, so.
The federal body that oversees what we do, the Appraisal Foundation, literally just passed a requirement that there has to be a 7-hour CE every 2 years.
So maybe that's what she's talking about.
It just happened.
Right.
Literally
okay.
like 2 days ago.
Okay. Okay. See, well, thank you for coming forward, because for many of you who may not be aware, some of the appraisal stories are horrible. And, this is not new either. It's been going on for years and years and years. It's just that it's becoming more front page news. And I'm sure some of you, the most egregious one that I can remember 2 years ago in San Francisco, where a Black family wanted to rehab their house, and they had been there for a while. I can't remember what they wanted to borrow or what it was trying to gain. But anyway, when they had the house appraised, it appraised for what they thought was relatively low, or not where they thought it should be. So in talking to some folk, they actually ended up having it appraised again. But what they did, they changed their interior. They did what some people call whitewash, right? And so they changed the pictures on the wall. They changed so much around the house so it appeared that white people lived there. The house appraised for $500,000 more. Same house, same neighborhood. Okay, why is that? I actually have a friend who has an appraisal case pending now. And it was with an appraiser who had been in the business for years. And he had publicly said, particularly with veterans, he always he low balls that number. Now, first of all, you bold enough to say it? And to a veteran? Okay. So like I said, it is about, you can train and talk all you want, but it's about where people's minds are, and really where their hearts are, and whether or not they want to change. Because I was at the governor's conference about a month ago, and I was telling this girl from the Tidewater area, I said, we've been talking about affordable housing, or what to do, or how to address our affordable housing problem for 35 years. I mean, ever since I've been in housing, or at least 25, okay? And so we go to this gathering and we talk about what's wrong. Well, we know what's wrong. The issue is, how are we going to fix it? And is it something, when we talk about these new ideas and ways of fixing the affordable housing problem, do we just write it on paper and then once we leave, we don't talk about it again? It's almost like, the planning office. You do this 3 and 5 year plan, you put it together, you put it on the shelf, and then you don't look at it again until the plan comes up for renewal, right? So it's like so much could have been done 5 years ago. Now, I know COVID threw, a little boomerang in there for a whole lot of things, but 5 years ago, 10 years ago, there were many things that could have happened to address or to prepare, because you knew things were moving up. I mean, when I listened to buying a house in Charlottesville, you need $750,000. I'm like, whoa, that's a lot. My question is, when is that going to stop? Are we going where so many people are priced out, right? You come out of college then, I don't care if you're Black or white. You can make 6 figures. You may still be living in your mama's basement because you can't find a place to live, or either you need, 2-3 roommates to help you with that. But one of the things that came out of that conversation was a mantra, and I said, I don't know what we can do, or what those who have the power to make things change. And she said, they don't care enough to do enough to make a difference. And I was like, unfortunately, that is probably true. So we just, try to keep hope alive. Anyway, that's the story from Regina. Thank you, guys.
Sorry, one more quick one. I'm sorry. I'm sort of amazed when you said that online lending are not regulated.
Isn't that amazing?
It's totally amazing to me. Can you speak to that a little more? I mean, I'm just curious.
No, ma'am, I cannot. And okay. I will be honest. I just know that that's the case. Well, that's my understanding of when we're doing our investigations, particularly when we get lending complaints. And so in studying it, we find out that it's really difficult to investigate those online claims. And that's how, and I guess that's how it was detected that they're not regulated. So that is a major, major issue.
So they could be doing predatory lending.
Yes.
Totally.
Absolutely.
And get away with it.
Yep.
Wow.
So we're going to fix that.
That's good. Good
All
for
right.
you.
There's a question up here. Okay.
Is it because the online lending is in states, but isn't there federal fair housing laws that can discuss
there are
this?
federal fair housing laws, yes, but when you're talking about regulated like by the Federal Reserve or yeah, okay. You know, we're talking about those type of guidelines that are in place. And so, which is, I'm glad to hear we don't like that. That's frustrating, right? So when Home and the National Fair Housing Alliance and others come to the table and we need voices, I'm going to call on you and make sure you're at the table, because people need to come forth and say, this is not right. Because I mean, it's not, and some of we've had some crazy things happen with online lenders for folk that is just unbelievable. Unbelievable. But you know, that's the way of the world now. So, but yes, ma'am, that is the case. And the more I find about it, I'll try to pass that on to Alan as to how we address it. Yes, sir.
What's your sense of how well fair housing violations are getting policed?
Okay, so the issue for me, well, I would say number one, they are policed when they're uncovered. They're uncovered when people know what their rights are. Okay. And so if you don't know what your rights are, you don't know when you've been violated. You can think something is wrong, which is why Home, and this is why I go out into communities and help people know what their fair housing rights are. Now, how much they're policed, I would say that, again, when people see something wrong and they want to say something, we follow up on those calls, on the anonymous calls. We follow up, of course, on the complaints that we get, and we investigate them before we say, you know, Shannon, you've done wrong. You know, we have to investigate it and find evidence and so forth to determine whether or not this allegation is true. So we do our share, and the Virginia Fair Housing Office does an investigation. We do a lot of, like I said, investigation. The Virginia Fair Housing Office actually, they are the ones that prepare for the Fair Housing Board. We don't do, we can't subpoena people and things like that, but we do testing, and the State Fair Housing Office does not. So sometimes we do testing based on a request or based on a case that we're working on. Sometimes we just follow social media. And we have somebody in our office who's really good at this, not me, who will go out and find, you know, comments or things that has happened on Facebook or Instagram or whatever else they got out there, where somebody's saying something like, you know, I am not intending to rent to any people who wear red tops with green Christmas trees in it. That means you're out, right? And so our office will do some investigation and some testing on that to find out, you know, is it just white people with red, or is it black people with red, or is it just everybody who wears their red top with green trees, you know? So yeah, but we do our best to go out and do as much investigation as we can. And like I said, individual and systemic, particularly, oh my gosh, and we won't go over this because my time is going over, but persons with disabilities, oh my goodness. People with disabilities, the complaints from persons with disabilities is the highest number of complaints on all fair housing protections. And that's not just in Virginia, that's across the country. You know, that is amazing, but it's constant. It is constant. So again, people understanding their rights and knowing what they are, and not just understanding their rights, but knowing where to go when something happens. That's a big issue too. People are not sure, I have this problem, but I'm not sure what to do with it. You know, so everybody here, and you look on our website is full of information that is easy to read. It's a good website. It tells you some of the cases that we're working on. And it's amazing some of the things that happen. I can really tell you, 2023, you think it's 1863 sometimes. But, you know, that's why we exist. And that's why I've been there 37 years. I guess if I could last 37 more, I would. But keeps me working. And I really, truly believe that the more we work together to understand one another, you know, we will begin to change. You know, there are some people think that it's never going to change. I don't think that there will never be any, that we can erase racism, but I think we can do certainly a better job just by talking to one another. Yes, ma'am.
So you said that there was a lot of abuse in the area of online lending.
Oh, I didn't say that. I said that a majority of lending that occurs today is done by online lenders.
Okay, so you're not indicating that there's more abuse in the area of online lending. You're just saying,
I wouldn't say it's more. I just know it's out there.
Okay, I interpreted or processed what you said as that there was a higher incidence of abuse in the area of online lending than there was in not, you know,
brick
direct
and mortar.
lending.
No, I'm just saying that there are a lot of lending, mortgage lending that is happening now. It's done online, not in the brick and mortar.
Okay, because my question was going to be, again, I was processing what you said, that there was a higher incidence, or there was a higher incidence of abuse in the area of online lending. And I was going to ask, can you break that down into how much of that is mortgage lending versus other types of lending that might happen online? But if you're not saying that, you're just indicating that there's a lot of online lending.
Right, and that it's not regulated.
Right.
Right. That's the important piece.
Okay, thank you.
Thank you. So thank you guys again so much. And I love Charlottesville. Just want to say that out loud too.
All right. Regina, thank you so much for being here with us today. And I would like to share that the DEI group is donating $1,000 to HOME, and their cause as a thank you for presenting to our membership. So thank you so much. Regina's presentation and this recording will be shared in Monday's news group issue. I also want to mention that CAAR has a Home of VA panel display in the Realtor Store reception with key information pertaining to today's program. You can visit it now through January 8th. For those here in person, I invite you to mingle and enjoy snacks and drinks during our reception. I wish everyone happy holidays, and I look forward to seeing you at next year's DEI events.